Hi, I'm Alex with Moxy. Welcome. And I'm here with Chris Childress, who heads up our sales team. Chris is based in Los Cabos, Mexico, and former expat from the mortgage business in Texas. Today, we're talking about a couple of things. The first being, welcome, Chris. Thank you so much for being here.
Yeah, it's a pleasure. Very exciting.
Yeah, it's gonna be a fun discussion. So today we're talking about this construct or this idea that why should we do things differently, right? Like, why not just do it the way you always have and do it, meaning foreigners purchasing property in Mexico, they figure out all these sort of complex ways in the US to leverage other assets and bring the cash across the border and quote, pay cash. Why is that changing? And why should it change, right? Why should somebody watching this that's planning on taking out a HELOC or a facility against a stock account or refinancing their home that is the roof over their head, why should they not do that? Why should they work with us instead?
Well, there's many different reasons. So first of all, let's start with leveraging the asset that you're actually looking to acquire or use as the collateral for that financing. A lot of people will say, "Hey, let's do a home equity line of credit in the United States," which is a fast and easy access to liquidity you have there, or even to leverage a financial instrument or an investment account that they've got in the U.S. But at the end of the day, they're not leveraging the asset that they're actually looking to finance. So what they're doing is liquidating something that's easy to access, maybe not quite as stable and secure as a long-term fixed rate mortgage might be, in order to purchase the real estate in Mexico.
Yeah.
What Moxy introduces is an option to do a long-term fixed rate mortgage for the U.S. citizen using the real estate asset in Mexico as that collateral. So you're actually pledging the real estate in Mexico as the collateral versus something that's easy to access in the United States.
Yeah.
Also with that, you're going to enter yourself into a fixed rate environment. So you have long-term predictable payments. You know exactly what you're working with versus something like a HELOC or a home equity line of credit, of course, which will have more of an adjustable rate mortgage that can move based on the markets, could move month to month, affecting your predictability and you're able to forecast.
Yeah.
So that's just one of many reasons that to do with that direction.
You know what's really interesting is that I was in a conference recently, and there was an example put up on the screen, and it showed what the interest payment was on a HELOC with a $500,000 balance, like in February of 2022 versus February of 2024, and it was like 3.5 times higher, right? Like
right.
There's that's a real issue when you're thinking about adjustable rate credit lines versus a fixed interest rate, a payment you can afford in the currency in which you earn your income, right? And really good point. When we think about other benefits of working with Moxy versus, proverbially bringing cash across the border and buying a house here in Mexico, what are some of those other benefits?
Well, when foreigners look to invest in Mexico, the appeal is there, right? They come, they see the beautiful beaches, all the excitement, the allure of being here. And in a lot of instances, common sense kind of just goes out the window, right? You get excited about, hey man, I've got the cash, you've got the keys, let's do a swap right now.
Sure.
And they don't really think about the long-term security of that investment. By using an institutionalized lender like Moxy, obviously we have a vested interest in making sure that we do our diligence on the property. We make sure that once the transaction is closed, the borrower is buying what they agreed to buy. We as a lender, we're filing our lien against the collateral, and we've done our diligence to make sure that it's a safe investment.
Yeah.
A lot of our borrowers will come to us, and even though they have the ability to pay cash and attain the property without using leveraging financing with Moxy, they will use us specifically for our diligence process to make sure that when they close, they know that they've closed in a safe and secure environment that they could trust.
Yeah, that's a really good point. And I think it's it really showed us we were onto something at Moxy when we had people saying, well, I don't really need a loan to buy this house, but I'm going to take one anyway because I really want you guys overseeing the collateral transfer process. And we were like, wow, thanks. That's great validation to the hard work our legal and closing teams do every day.
Absolutely. And you'd be surprised at some of the stuff you see out there. For example, we saw a customer who came to us who had a property that she had owned for over a decade, and had all this liquidity and was ready to just harbor some of the equity and do some fixing up on the property. And come to find out, whenever we got into the process, we got the title, it had been one of those, hey, this is really pretty. I've got the keys, you've got the cash. Let's make a deal and we'll work out the details later. And then a decade passes, she's looking to refinance and harvest that equity, and she didn't own the property at all.
Oh my goodness.
So it took a very large portion of the equity she was trying to harvest in order to right that situation. And we were fortunate that she was able to get through it and get it fixed. But you see this over and over again. You know, you just want to make sure that you know what you're getting into, and you've got a team of trusted advisors that will help you to make sure that when it's done correctly.
Yeah, such an important point. If you're watching this video and you're buying property in Mexico, even if you don't work with Moxy, please hire competent legal counsel to represent you. Real estate agents are also really excellent, most of them. However, you got to have a competent attorney that's reviewing the deed documents. Please, 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 because you don't want to end up, that sounds like there was a happy ending in that situation, but you don't want to end up 10 years from now finding out you don't actually own the house that you paid for and that you've been living in the last decade, or the underlying land underneath it actually belongs to somebody else and they can kick you out at any time, because that happens, right? Yeah, like such a powerful reminder. So yeah, really appreciate that. So let's just dive in a little bit deeper. What are some of the things that, like, so you run the retail sales team. What are some of the things that clients like most about Moxy's product options and the service that they get from your team members?
Oh, goodness. Well, it starts out in the initial interview, the initial consultation. Moxy's got a very strict policy on transparency and making sure that we're providing all the information right up front. Sometimes some of the information with the increased cost of acquisition in Mexico are not the most comfortable conversations to have, but we're committed to make sure we're providing all of the information so that our buyers can make an informed decision. Also, customers find it very beneficial that we lend, so we originate and we service in U.S. dollars, so it's easy to understand that. Once we close the transaction, we kind of transfer that asset and the servicing of that loan back to the United States. So customers are making their payments in U.S. dollars in their home country. They're not trying to make cross-border payments each month, deal with conversion or exchange rates and all that kind of stuff. So it makes it a whole lot easier. Also, Moxy is what we call a Stockman servicer. I hope I pronounced that correctly. But essentially, we are set up in the United States and, again, service in U.S. dollars, handle the escrow payments on behalf of the borrower for taxes and insurance and all that. And then we also provide what's called a 1098 IAT statement, which is the vehicle necessary to use to potentially deduct some of that interest paid into your mortgage on your U.S. taxes if it fits the tax situation for that particular borrower. And that is a huge benefit for people who are classifying their homes as either primary residence or second home.
Yeah.
And could give them that deductibility there.
Yeah. Even or as investment property, like, and you're declaring the income on your Schedule E, theoretically, you should check with your CPAs or tax advisor. We don't give tax advice, but theoretically you could deduct the mortgage interest on that asset, right?
That's right.
Against the rental income. Yeah.
That's right. And we're providing the vehicle to do that through that 1098 statement there.
Yeah. Really important point.
Yeah, that's a big point.
Yeah. That's really cool.
In addition, we've talked about a moment ago, the predictability. You know, these are not adjustable rate mortgages with prepayment penalties or balloon notes or any exotic features like that, you know, kind of force you into an uncomfortable situation. We offer long-term fixed rate mortgages specifically for U.S. citizens, so they know when they sign up, whether it's a 20, 25, or 30-year fixed rate mortgage, what their payments are going to be for that time. Yeah. So they can, build their business around it. If they use it for vacation rentals, they can budget around it and things along those lines. So
yeah, that's really
important detail.
It's kind of a plain vanilla loan.
That's right.
I think in a foreign country, that's what our clients appreciate a lot, right?
Absolutely. We believe that owning real estate in Mexico should be exotic, not the instrument you use to do so.
Yeah.
To finance it. So
shouldn't have an exotic mortgage, should have an exotic homeownership experience.
That's exactly right. That's exactly right.
Awesome. That's really cool. So going back to your point just a minute ago about servicing and subservicing, I was talking to a client the other day. They said that they were having, it's actually not a Moxy client. I was talking to a foreign owner of a house, a very, very nice house here in Los Cabos, said that they couldn't make their property tax payment on the property tax assessor or tax collector's website unless the billing address for the credit card was in Mexico. So like, it's basically very difficult as a foreigner for you to pay your property taxes or your fideicomiso renewal if you're not here, right? You go wait in line, or you have a credit card with a Mexican billing address. So how does like Moxy and our servicing sort of program work with respect to that?
Absolutely, man. That is a great question. So once you close a loan with Moxy, we're along with you for the life of that loan. So we've got our servicing entity in the United States. So obviously, we collect our payments and manage the relationship with the borrower on that side. However, we do collect escrows for taxes and insurance, and then when those assessments come due, we have our boots on the ground in Mexico who are able to go down to the offices, make the payments there real time, without having to navigate the complexities of what you're referring to with the U.S. credit cards and paying the Mexican bills and that kind of stuff.
Yeah.
In addition, the fact that we've got people on the ground in the locations where the property is located, Mexico often offers discounts by paying early or even on time for your taxes. So Moxy is always going to make sure that we're making those payments to try to capitalize on whatever discounts are available.
Yeah.
Right there.
Good. Very good point. And like a critical added benefit, right? While we're talking about taxes and fees, I want to ask you in a minute about closing costs, because that's always a big topic. But before we get there, like, if you could just talk to us a little bit about like what are property taxes like in Los Cabos or in Mexico compared to like Texas, where you came
That's
from,
where I came from.
California, where I come from, right? Talk to us a little bit.
Yeah. Well, it's fractional. It's fractional. It may be, closing costs are often a little bit higher at the acquisition phase in Mexico than what you would be accustomed to in the United States. For example, when we speak with borrowers, we're generally going to estimate anywhere from about 8 to 12% of the purchase price or assessed value for settlement charges, whereas in the United States, that might be 3 to 5% on the expensive side. So there is quite a difference in the acquisition cost, but the carrying cost is where the magic comes in.
Yeah.
For example, in Texas, for a new development, we're looking anywhere from 2.5 to 3.5% of the value for your annual tax base. Whereas here in Los Cabos, we estimate much, much less, maybe 30 basis points. I mean, it's just literally a fraction of what it is in the United States for carrying costs.
Sort of like round numbers, like Texas 3%, here 0.3%.
Roughly, yeah.
Okay.
It's a huge difference on the initial estimations of what those would look like.
So on the ongoing basis, you might have a lot of closing costs, which I'll ask you about in a minute. You might have a lot of closing costs up front, but on an ongoing basis, it's a lot lower carry costs on property tax, for example. How about hazard insurance? I know we had a presentation just yesterday from a really talented insurance agent that partners with the Moxy team a lot. Like, how are hazard insurance premiums here versus in the U.S.?
I think they're pretty comparable. Obviously, it's just like in the United States, where hazard insurance is going to be based off the risk. Okay, so if you're in an area where you have a lot of earthquakes or hydro events and that kind of stuff, then you may have a little bit more, maybe a little higher than your other areas that are less risk, but it's going to be comparable or less expensive for the real estate or for the insurance figure in Mexico than what I'm accustomed to seeing in the United States.
Cool. Yeah. One thing that stood out to me during that presentation was like all of the things you get in a hazard insurance policy in Mexico, which is given by a regulated entity, so it's relatively safe. But like you get hydrometeorological coverage included in your policy. It's not like an extra, right? Yeah, it was just like, it was cool. It just indicated to me like there are a lot of, sort of much lower carry costs as far as like on an ongoing basis. All right, so to get to the big question, talk to us about the upfront fees. You said 8 to 12, sometimes we see higher than that, % of the property purchase price in upfront closing costs. How does that work? How do you and your team talk to clients about that on an ongoing basis? And like, what are some ways that Moxy helps understand it and also maybe help finance it?
Yeah, that's a great question and a great caller from one of our new recent improvements to our program. I'll plug here for us.
Okay.
Closing costs are going to be a little more expensive than what you find in the United States, and that's because you see things here in Mexico that you don't generally see in the United States, with the exception of a couple of states and very specific sectors of the real estate market. And one of those big things is going to be what we call your asabi tax and your transfer tax, which is basically a sales tax on the real estate itself. In Mexico, that's going to range anywhere from about 2 to 5% of the value of the property, depending on where you are in the country. So essentially, if you've got $1 million property and you've got a 3% acquisition tax, that gets pretty healthy, and that's something that you don't generally see when financing real estate in the United States. So that's one thing to consider. Yeah. Secondly, for foreigners to invest in Mexico, there are a few steps that you have to take in order to get all the documents in order to be able to do so. For example, in Mexico, we use what's called a fideicomiso, which is essentially a real estate trust specifically designed for foreign people, for foreigners buying real estate in Mexico. In order to obtain that fideicomiso and to have permission to set that up, you're required to go to the Secretary of Foreign Affairs and get a permit, for example. That's a one-time fee. You do it up front, but essentially you have to go get that permit, and that's a cost that you wouldn't generally incur in the United States. So there are some things that are more expensive up front. We worked really hard to be super transparent and explain this in a user-friendly and easy to understand format. We've really got it broken down to the basics, and we have this document we call it Mexico Real Estate 101, which is kind of a two-part document. It basically has couple of grids in there, and it says, we are Moxy, kind of here's what we do and here's what we charge. It's pretty easy to arrive at what Moxy's going to charge for the services. But then we've got a separate table in that document that has a list of all the other fees that you will more than likely incur in your journey in financing real estate in Mexico. And that breaks down in ranges, right? So it'll talk about the acquisition tax that we referred to, what the permit fee might look like, things along those lines. Gives you a breakdown of all those other fees.
Yeah.
So we like to spend time going through that on a line by line. It is kind of a top level early fee disclosure without getting specific to the exact property, because obviously at this stage of the process, we don't know what we don't know. But we want to make sure that we arm our consumers and even our partners with a clear vision of what to expect as we move forward. That way, when we encounter these things, we're able to reference back and say, okay, we talked early on about this, we fall within that range, or whatever that case is.
Yeah,
we've done a really good job of really bringing that down to an easy to understand format.
Yeah. What I really appreciate about you and your team is you sort of operate, I don't know if you even say this out loud, but it seems like you operate with the mantra of we're not always going to tell you, client, what you want to hear. We're going to tell you all of the facts. We're going to lay them out for you in an easy to understand format in a document. And then we're going to spend the time to walk you through line by line what each of these things mean. And you might not like it, but if you want to buy a property in Mexico and you want to do it the right way, legally, this is what it's going to cost. And we're going to help you understand what that looks like. And I think that's a unique value proposition that, at least so far in the few years I've been leading Moxy, I haven't seen from anyone else, right? So I think that's you guys do an awesome job with the transparency and
thank you. The life cycle to get from interest to closing in Mexico is much longer than it is in the United States, right? And there's a lot more involved. And of course, we've talked about it's a lot more expensive, or not a lot more expensive, but relatively more expensive than it is in the United States. And it's not just the amount of the total fees, but it's the time and the method in which those fees are collected, right? And in the United States, a lot of vendors will work on contingency. They're not collecting fees up front. If it doesn't close, they don't get paid. However, here in Mexico, when we request services, for example, a title search or an appraisal or whatever the thing might be, we're responded to with an invoice, right? So the customer, we kind of share that exposure as we move through. So obviously the borrowers are making some deposits towards those costs and early on in the process. And what we learned early on is that there's two big drivers, right? It's obviously going to be interest rates, which we talk about, and then of course fees and that kind of stuff. And we found early in the process, if we went through the traditional of here's all the great things, but we don't really expand all the things that are uncomfortable early in the process, they become more uncomfortable later in the process, and it costs the borrower more money, more frustration, as well as us on our end. So we learned, if we can get transparent on the front end and create the right expectations, and customers feel much more comfortable on the back end, and we have a much higher likelihood of actually closing the transaction.
Yeah.
So that's the reason we take that approach.
Really good point. And I think just from our customer feedback surveys, we hear all the time, people appreciate getting all the information up front, having a trusted person they can ask questions to along the way, working with a competent team on the things that are really foreign, right? All the legal and closing documentation and processes, and ultimately just being well cared for by a team of professionals who take their responsibility and their fiduciary duty to their clients very seriously. And so, hear that often. Okay, so big question that we get probably more than anything else, besides fees. rates. Let's talk about interest rates
Okay.
a little bit. So I'll leave that pretty broad, but tell our viewers like what you got on the interest rate.
So interest rates for Moxy loans are very similar to what you would find in U.S.-based mortgages. And what I mean by that is that interest rates are risk-based, so they're going to be driven by credit score, your skin in the game, if you will, or equity position, so amount of down payment or loan to value we refer to it as well as the loan amount. So that's really kind of the closest tie. Now, obviously, it's a little bit more risky transaction for the investor and things along those lines. So you're going to pay a bit of a premium over what you might see in the United States. Generally speaking, we're going to be about 1.5 to maybe 2% higher than your prevailing 30-year fixed rate mortgages in the United States. When it's a different type of loan. So if you're seeing 6 and 7% rates in the United States, you might find 8 to 9% interest rates for a Moxy loan that's similar.
Yep. Good point. And I think people often ask us like, well, gosh, what if I'm going to rent it out on Airbnb some of the time? Then is the rate going to be higher if I say it's my primary residence or because I'm completely relocating or it's a second home? Like, how does that part work?
Sure. So investors base interest rates and base their pricing off of risk, right? And they're going to look at what's the likelihood of if the borrower finds himself in a precarious situation and they've got to make an adjustment. What are they going to be the most attached to and protect the most, right?
What bill don't you stop paying?
That's exactly right. That's exactly right. So, obviously primary residence is going to be the most secure investment. That's their roof over their head. They're going to do whatever it takes to keep that intact. Second home, kind of the same thing. If it's pure investment, then, you often see sometimes an adjustment. With Moxy, we don't have any price differentiation between primary residence and second home. There's a slight adjustment to the interest rate if it is purely investment. However, Moxy's got a very, let's call it a liberal policy on second homes. So essentially, most of our customers will purchase these homes. They intend to use them as a vacation home, which they can spend a couple of weeks per year in, and then they intend to cash flow it through Airbnb rental or vacation rental for the rest of the year. So if the borrower intends to spend any portion of the year inside the home, whether it's a week or 10 days, then we will consider that a second home versus an investment property, which means there's no adjustment to interest rate or loan to value or any of that. So that's a great opportunity for that person who's kind of doing a hybrid, right?
Yeah.
They're going to purchase their investment home and let it fund itself. Purchase a vacation home and then let it fund itself through vacation rentals.
Yeah.
And another great benefit, if I can call it out real quick, about the people who are cash flowing using for vacation rentals is the fact that we talked about the exotic features that we don't include in our mortgage. Like there's no prepayment penalty, there's no balloon note. And obviously our interest rates are fixed for the duration of the loan. So and here's another thing, we don't charge an adjustment or there's no adjustment in price between say a 15-year and a 25-year. This is a slight adjustment for a 30-year loan, but there's no difference between like the 15 or the 30. So most of our customers will opt for a 25-year fixed rate mortgage. There's going to be no prepayment penalties, no balloons, anything along those lines. That way they've got the lowest mandatory debt service in the months where they're using the property for themselves, or maybe when it's an off season, they don't have a high occupancy rate, but they have full freedom to accelerate that principal balance during the harvest months, if you will, right? When they're really busy, they're in the cash flow and all that. So
Yeah.
gives them a lot of flexibility in that, and that's something that we're proud to offer.
Nice. Yeah, that's good. Awesome. I'm trying to think of the other frequently asked questions we get. Talk a little bit about title insurance, just like at a high level, because I do hear this on the street sometimes, like, oh, you don't need title insurance in Mexico.
That's right.
What's your perspective on that, or how does your team talk to clients about that?
Well, we're obviously mortgage professionals with our experience in the United States, right? And generally speaking, I wouldn't purchase real estate in the United States without having a thorough title search done and obtaining a title insurance policy. And the purpose of that obviously is to protect against anybody who could come back and stake claim to the property, whether it's a construction company who's done work on the property, maybe wasn't paid in the past, or maybe the property was conveyed without a signature that was necessary from one of the co-owners way back. Title insurance companies, essentially, they work through the title search, they review all the information, and then they make sure it's a clear delivery, and then they insure against claim of that property.
Yeah.
And again, I would never purchase real estate in the United States without running through that, making sure everybody's doing it on it. So why would you do it here? But it kind of goes back to what we talked about earlier about, you get excited about it, right? There's the beach, there's the margarita, there's the sombrero, right? And, all caution to, you just throw caution to the wind and like, he says it's good, it must be good.
Yeah.
But again, we see examples of exactly what we talked about earlier in this conversation about people who thought they had purchased property and got excited, and they've just been going on for years, sometimes decades or more of owning this real estate, and just to come to find out that somebody else actually had claim to that title.
Yeah.
And that's a very scary place to be, especially when you invest your hard-earned, money into that. And it's not just a financial investment, it's an emotional investment.
Yeah.
Right? And then you come down line, you find out that it's not quite mine after all.
Yeah.
And it's quite the process to clean that up. So it's so important to make sure you've got the things along those lines.
Yeah, totally agree. Chris, thank you so much for being here. I think we've covered some of the most frequently asked questions we get from clients about this. You and your team just do such an incredible job taking care of our customers and our real estate partners and making global ownership possible for the world. And just thanks for being here and for sharing.
It's such a pleasure. So very excited to be a part of changing the world.
Yeah.
For foreigners investing in Mexico.
So much fun, right?
Yeah. Yeah.
All right. Well, bye for now. Take care.